Grug deposits 1,000 mammoth teeth into the first cave bank. Teller smiles. Hands Grug a receipt. 1,000 teeth. Safely stored. Available anytime. Grug feels good. Teeth are safe. Sitting in giant vault somewhere. Waiting patiently for Grug to return. 3 weeks later, Grug needs 200 teeth for new hunting equipment. Walks back to bank. Teller smiles again. Hands Grug 200 teeth without hesitation. Grug satisfied. System works exactly as expected. But then Grug starts asking questions. Grug asks Teller, "Where exactly are my teeth right now?" Teller shifts uncomfortably. Grug asks again, "My 1,000 teeth, where are they physically located?" Teller takes long pause. "Most of them," Teller admits quietly, "are not here." Grug stares. "Where are they?" Teller looks around and lowers voice. "We lent them to someone else." Grug sits down heavily. Today Grug explains one of the most important and least understood mechanisms in all of modern finance, fractional reserve banking, and why understanding it changes everything about how you think about money, banks, and financial risk. Here is the fundamental truth about banking that most cave people never learn. When you deposit teeth in a bank, those teeth do not sit in a vault waiting for you. The bank takes your teeth and lends most of them to other people, immediately. That is the entire business model. Bank pays you small interest on your deposit, say 2%. Bank lends your teeth to someone else at higher interest, say 7%. Bank keeps the difference minus 5%. That spread, multiplied across billions of deposits and loans, is how banks make money. This seems straightforward. But here is where it gets extraordinary. Banks do not lend out just the teeth they receive in deposits. They lend out multiples of what they receive. This is fractional reserve banking. And it means banks are literally creating money. Grug explains how. Grug draws on cave wall to show the mechanism clearly. Grug deposits 1,000 teeth in first cave bank. Bank is required to keep 10% in reserve, 100 teeth. Bank lends out remaining 900 teeth to cave builder. Cave builder uses 900 teeth to buy materials from cave supplier. Cave supplier deposits 900 teeth in second cave bank. Second bank keeps 10% in reserve, 90 teeth. Second bank lends out remaining 810 teeth to mammoth farmer. Mammoth farmer deposits 810 teeth in third cave bank. Third bank keeps 10% in reserve, 81 teeth. Third bank lends out 729 teeth to cave school, and so on, and so on, and so on. Grug traces what happened starting from his original 1,000 tooth deposit. Original deposit, 1,000 teeth. Total deposits created across all banks, approximately 10,000 teeth. Total loans made, approximately 9,000 teeth. From Grug's original 1,000 teeth, the banking system created 10,000 teeth of economic activity. Grug stares at cave wall for a very long time. The bank did not find 9,000 extra teeth somewhere. The bank did not dig up hidden mammoth tooth reserves. The banking system created 9,000 teeth of new money through the lending process. This is not a conspiracy theory. This is not a secret. This is exactly how modern banking works. It is in every economics textbook. Most people just never read economics textbooks. The multiplier effect, how much money gets created from each deposit, depends on reserve requirements. 10% reserve requirement, up to 10 times money creation. 5% reserve requirement, up to 20 times money creation. Some modern banking systems have moved toward lower reserve requirements with capital ratios used instead. Grug asks the obvious question, is this not incredibly risky? Answer, yes, which is exactly why bank runs happen. Grug explains bank runs. Remember, First Cave Bank only kept 100 teeth in reserve from Grug's 1,000 tooth deposit. 900 teeth were lent out. Now imagine rumors spreads through Valley. First Cave Bank is in trouble. 100 depositors panic simultaneously. All rush to withdraw teeth at same time. But bank only has fraction of deposits available at any moment. Bank cannot pay everyone immediately. Word spreads faster. More people rush to withdraw. Bank collapses. Even if the rumor was completely false, even if bank was perfectly healthy, the bank run itself causes the collapse. Because no bank in fractional reserve system can survive everyone withdrawing simultaneously. This is called a self-fulfilling prophecy. Fear of bank failure causes bank failure. Grug finds this deeply unsettling. Grug now addresses the obvious question every cave person asks at this point. If my teeth are not actually in the bank and the bank can collapse if people panic, why does anyone trust banks at all? 2 reasons. Reason 1. Deposit insurance. After the 1930s Great Cave Depression, when banks collapsed and cave people lost everything, governments created deposit insurance systems. In the United States, FDIC insures deposits up to $250,000 per depositor per bank. In the European Union, similar schemes insure up to 100,000 euros. Most developed countries have equivalent systems. This means even if your bank collapses, the government guarantees you will get your deposited teeth back up to the insured limit. Grug considers this important. Ordinary cave people do not need to worry about which bank they use as long as deposits stay within limits. This insurance also solves the bank run problem. If people know their deposits are insured, there is no reason to panic and run. No run, no collapse. Elegant solution. Reason 2. Central bank as lender of last resort. If a bank faces a liquidity crisis but underlying loans are healthy, the central bank can lend emergency funds to bridge the gap. This backstop prevents healthy banks from collapsing due to temporary panic. These mechanisms have made modern banking dramatically more stable. Bank runs still happen occasionally, but mass collapses are much rarer. Grug now explains the important limits. The $250,000 limit in the United States is crucial to understand. If you have more than this at a single bank, the amount above the limit is uninsured and could be lost if the bank fails. Solution: spread large deposits across multiple banks to stay within insured limits at each. Or use different account categories like individual, joint, or retirement, which each get separate limits at the same bank. Grug also notes, insurance covers deposits, not investment products like stocks, bonds, or mutual funds held through a bank's brokerage. These are covered by different, more limited protections like SIPC. Know exactly what is and is not covered in your country. Stay safe and know your protections. Grug says, smart cave people plan ahead. Grug now sits down and gives practical conclusions. What does understanding fractional reserve banking actually mean for how you manage your teeth? Practical point 1. Keep deposits within insured limits at any single institution. This costs nothing and eliminates meaningful risk. Grug sees no reason to hold more than insured limit at single bank. Spread across multiple institutions if needed. Practical point 2. Understand that your bank account balance is not the same as having physical teeth stored somewhere. It is a liability of the bank, a promise to pay you. In normal circumstances, this distinction does not matter. But in systemic financial crisis, this distinction can matter. Having some diversification and assets outside traditional banking is reasonable. Practical point 3. Savings accounts versus current accounts. Money you might need quickly. Keep in current account or high-yield savings. Money you will not need for years. Invest it. Do not leave it sitting in savings account earning 2% while inflation runs at 4%. Grug points out, large cash balance in savings account earning below inflation rate is losing purchasing power every year. Cash is appropriate for emergency fund and near-term expenses. Beyond that, invest. Practical point 4. Understand what your bank actually earns money from. Banks earn from the spread between deposit rates and lending rates. They earn from fees. They are businesses optimizing for their profit, not yours. You are not loyal to your bank. Shop around. Online banks and credit unions often offer better terms. Treat it as business relationship and find best terms available. Practical point 5. Do not fear the banking system, but do understand it. Modern banking is significantly safer than historical banking. Grug is suggesting, understand what you are actually participating in. Know your protections and their limits. Diversify appropriately. Grug summary. Banks do not store your deposits. They lend them out. Fractional reserve banking allows banks to create money. Keep deposits within insured limits. Understand what is covered. Do not leave excess cash in low-yield accounts. Invest beyond emergency fund. Tribe thinks bank keeps teeth safe in vault. Teeth are not in vault. Teeth are working. Sometimes that is good. Sometimes that is risky. Grug understands exactly which is which. Next video, Grug discovers the wealth gap. Why rich cave people keep getting richer. Do not miss it.